fund. Okay, so many of you are familiar with investing in the financial market by purchasing units of funds. Funds is a kind of investment vehicle behind which there are some expert asset managers who manage those funds, and they sell the units to the interested investors, and interested investors purchases the shares or purchase the units of the fund in exchange of getting the ownership of the fund. So this is a highly recommended way of making investment in any asset of financial market, because many of us do not have the similar level of expertise actually required, demanded to play in the financial market. So play is not a kind of word I'm using here in a negative way. I'm using here in a positive way. I mean, participate or the manage. So it is a kind of a skilled game, and you need to have a much knowledge, expertise, and some control on your behavior. These things, there are lots of things you need to possess before getting the rights or before getting the responsibilities of managing a fund. So this is not our purpose that we will check that what are the requirements to manage manage an investment fund. Rather, we'll are interested to see that how funds can be managed in an Islamic way, or more precisely Sharia compliant way. So there is a concept which is going on for several, I would not say several, but a few decades, 2-3 would be several, okay, several decades, that ethical way of fund management. So ethics has been highly emphasized because it has been observed that a number of fund managers are outperforming in the financial market, but over time it has been discovered that they are not ethical. They are outperforming. They made a blockbuster performance, but they are not unethical, which had been proved later, and it brought negative consequences for the fund managers and also for the financial market as well. So ethical fund management is more closer to the Islamic way of managing fund. So in this chapter, we will try to see that how Sharia guides the fund managers to manage the fund in Islamic way. And when you are managing a fund in Islamic way, it will be observed that you are actually managing your fund not only in legal way, but also in ethical way. But when you are managing a fund in a legal way, there might be some issues that you are not managing a fund in ethical way, or you are not managing a fund in a Sharia compliant way. So which contents will be covering in today's lecture? These have been summarized here. Some issues, how can we categorize Islamic funds, and what are the screening criteria? And it is highly interesting topic. And how can we purify some income in which there is some mixture of halal and haram income, and what is about Islamic hedge fund, and what can we learn from the ethical investment industry. And if we have the time, we will look into some case studies of Islamic funds. So there are actually two ways of categorizing the investment funds. One is open-ended and another one is closed-ended. I believe many of you have completed your financial markets and institution course. That's why you are already aware of it. Briefly speaking, open-ended mutual funds are open to issue units and close their units at any point of time. However, closed-end funds are not permitted to issue more units after the initial subscription. So they are bound to make business with the funds they have been able to accumulate on their initial subscription. And closed-end funds are also limited by from the first issue. You already have learned it from the initial subscription, as the closed-end fund cannot take more subscription. That's why the amount of fund on with which they started their business will remain as a constant amount. But over time, Islamic open-end mutual fund can increase their investable fund, increase the investable fund. Closed-end fund can make the reinvestment of their income. And another issue is which is making these funds different is that the period fixation. So open-ended mutual fund has no time period, no fixed time period, but closed-end fund has a fixed time period. And Islamic investment companies can be identified as those investment companies which help the companies to raise funds in a Sharia compliant way, and they can raise their financing by Sharia mechanism, and they discourage the leverage, and they are also known as investment trust in some countries. And some advantages of investing through fund is that there will be a strict monitoring, and the monitoring will in a Islamic investment fund, the monitoring will the Sharia monitoring will also be observed. And there might be some income which is not fully Sharia compliant. In that case, the funds can find out the ways that how can purify the income. And one way of purifying impure income is to make charity of the Sharia compliant income without expecting any benefit, and they must be donated to a specific fields specified by Sharia. And typical fund structure is different from the Sharia fund, and Islamic funds are alternatively known as Sharia fund. And how the conventional fund, how the Sharia fund is different from the conventional fund. So the difference is mainly on this box. There will not be any Sharia board or presence of Sharia board in this place, which will guide the fund manager, or the fund manager will report to the Sharia board. This thing is absent in case of conventional fund, but in case of Islamic fund, or in case of Sharia fund, you will see that there is a place of Sharia Board, and manager will be responsible and accountable to the Sharia Board to report that he or she is managing the fund in a Sharia compliant way. And Sharia Board will also be responsible to guide the manager to make sure that the manager is managing the fund in a Sharia compliant way. So investment vehicle is actually the fund. It is actually the fund. Okay, I mentioned about the vehicle. So it's a kind of fund. It's actually a fund, or you can say specifically mutual fund. And who will subscribe this fund units? The investors, interested investors. They are also alternatively known as unit holders. Okay. And what investment vehicle actually does, or what the fund actually does, they make investment in several companies. And according to Sharia guidance, the company should not be some companies which does not make business in a Sharia compliant way. So the company 2, for example, here, or company 1 or company 3, company 3 cannot be something like that. It is a kind of Netflix. Okay, Netflix cannot be a company in which the Islamic fund or Sharia fund can make investment. Okay, then if we take an example, say British American Tobacco Bangladesh Company, or BATB. Okay, so this company cannot be here when the Islamic fund or Sharia fund is making investment. And Islamic fund also cannot make investment, say for example in Break Bank. I believe you have got the reasons behind this, why I have written this company name here. I mean, this cannot be here. Remember. Am I clear up to this? Have we got the basic structure?
Yes, sir.
Okay, let's proceed.
Yes, sir.
Okay. Now, Islamic funds can be categorized in another alternative way, that is the assets base in which they are making investment. So if they are investing in equity securities or equity assets, I mean equity securities, in that case they will be known as Islamic equity funds. And from the name you can easily understand that they will be primarily interested to invest in shares of listed companies. Okay, and you already have got the concept of ijara, and what the Islamic ijara funds will be interested to make investment. They will be interested to make investment in the companies which make the ijara business. Okay, and the funds itself can make business of ijara. Okay, they can make money from the ijara business or leasing business. And commodity funds are primarily interested to invest in commodities. You probably can recall that we talked about the salam in previous class, which is specifically related to the agricultural production and financing of agriculture. So if the funds, I mean the mutual fund participates in salam agreement, in that case, as you know that salam is for the purpose of commodity, you can identify the fund which has participated in the salam agreement. The fund must be interested in commodity type of assets. That's why this fund will be categorized as commodity fund. Other than this, the commodity funds can also be interested to purchase the gold, purchase the silver, purchase the crude oil, purchase the fossil fuel, and purchase the livestock, purchase the gasoline, purchase these things, okay, which are actually the commodities on which you can make profit by purchasing at a lower price, or by purchasing at a opportunistic price and sell at a higher price, or sell at a fair price or considerable price. So before proceeding, let me ask you that, can Islamic funds make investment in cryptocurrency? Anyone, please? You probably have learned about the cryptocurrencies.
Sir, no, sir.
No. So what might be the reason?
So it's virtual, that's why.
It's virtual, that's why.
I mean, in my understanding, sir. Yeah.
Okay. Any other response? Any other response, please?
স্যার এটা অনেক আনসার্টেন, এই জন্য হয়তো।
Okay, there is a presence of gaharar component, right?
স্যার আনসার্টেনিটি।
Okay, but it is actually a commodity. I mean, the commodities, commodity kind of asset. Okay. Here, commodity does not include those things which are used for consumption. Okay. So remember, I mentioned the gold, I mentioned the silver, I mentioned the metals, I mentioned the iron, I mentioned the acrylic, or I mentioned these things. All these goods are not commodities. Okay. So it can be anything, but in this commodity category. And we have learned that Islamic funds cannot make investment in, Islamic commodity funds cannot make investment in cryptocurrency, because of there is a presence, there is a likely, it is very likely that there is a presence of gaharar in the pricing of these commodity assets, or this precious assets. Okay. And based on the 2013 statistics, don't underestimate the statistics, just look at what was in 2013, and equity dominates over other assets, over other funds. Equity funds, Islamic equity funds dominates other assets, and actually the picture right now is similar. Still now, Islamic equity funds dominates other type of funds. Okay. And nowadays Shukuk has got higher place, just after equity or after money market. Okay. The Shukuk, and it has been made popular for last several years. Okay. And another statistics which shows that which country, in which country the Islamic funds are domiciled. And based on the value of the funds, you see Saudi Arabia and Malaysia are the top two countries in which most of the Islamic funds are domiciled. And these are the two countries in particular which have their financial market, probably capital market, probably their capital market, market capitalization exceeds $100 billion. So this number is huge. So no other Muslim country is closer to Malaysia or Saudi Arabia in terms of the market capitalization. So these markets are very big. But the question is, do their investment, I mean the securities or the assets in which they have made investment, I mean these funds are mostly European America based, Europe America based, or Asia based? What do you expect? Though these funds are domiciled in Saudi Arabia and Malaysia, but the question is the securities or the assets in which they have made investment, those assets are mostly Asia based, Africa based, or Europe America based? What is your expectation? You are there with me?
Yes, sir.
Okay, what do you expect? So the answer is European and American. And now I would request you to explore why the answer is this, why not others? Okay, and now you see that over time, Islamic fund assets have grown substantially. And in later of our course, I will show you the latest figures, and you will see that you probably can recall from the lecture 1 that I showed you some figures from the latest numbers, in which you learned that what is the amount of Islamic bank assets held by Islamic banks and asset held by Islamic capital market. You probably can recall. Can you recall some numbers? Or can you recall that those numbers are presented before you in the lecture 1? Anyone? I'm not asking for figures. I'm just asking that you are introduced with some figures, latest figures, which showed you that what is the current market value of the assets held by Islamic banks, held by the Takaful companies, and held by the Islamic capital markets across the countries in the world.
Sir, actually, I opened the lecture and I can see it's in trillion USD.
Yeah. I'm not relating those numbers here. Remember, these are only the fund assets. It is a very small contribution in the total financial market in comparison to the assets held by the Islamic banks, then Takaful companies, then another one is Islamic banks. Another one is capital market. So this fund assets is actually is a portion of the funds assets held by the market capitalization of Islamic capital markets. Okay, you see one number for Islamic market, Islamic capital market, assets held by Islamic capital market. Have you found this? Or you want me to open it for you? Okay. No. This one. Okay, this one. This is for the assets held by Islamic funds and takaful, shukuk, and the banking. Which one is the dominant? Banks, funds, shukuk, takaful, which one?
Banking assets are dominant.
Sir.
Okay, can you recall that we saw this kind of diagram in the lecture 1? Yes, no?
Yes,
Did
sir.
you see it? What do you think? We saw it or we didn't see it? You have to respond either yes or no.
Yes, sir. In the lecture 1, we saw this graph.
Okay, okay. So you need to have a brief idea because the midterm is approaching where there will be MCQs. Okay, so I'll test you that how much your memory works. Okay. So
Yes,
don't
sir.
underestimate your memories. So you try to take some numbers so that it will help you to in many places. As long as you are taking this course. Okay. So let's proceed. So based on the objectives of Islamic funds, funds can be classified in multiple headings. So I'm just giving you some ideas that how can you discern or how can you unearth the purpose of the fund. So growth fund is particularly interested to make more capital gain instead of relying on the dividend income. So I believe all of you are familiar with the difference between the capital gain and dividend income, right?
Yes, sir.
Okay. So the fund which is more interested to achieve their income from the dividend income, in that case, the fund is known as income fund. And the fund which is more interested to earn capital gain, that fund is known as growth fund. Okay. And if you have a mixture of both growth and income, in that case, your fund will be categorized as balanced fund. Okay. There is another fund category which is rarely seen specifically, that is the recovery fund, which is primarily interested to look for investing in undervalued companies. Okay. And you will see some global equity funds. So you might see that these funds have investment horizon, not investment horizon, investment, their investment, invested securities are domiciled in several countries, several continents. Okay. So, and there will be some regional and country funds based on some region and based on some countries. And our funds, our local funds are mostly country funds. They do not make investment outside. And it is the learning from the portfolio management course. I believe that you, many of you already have taken the portfolio management, which has these issues: weighting, liquidity, and balanced or skewed. So I do not want to repeat these things here, that how you will make weight of your assets in your portfolio and which will be held more or which will be held less, and how will you manage the liquidity, and how can you make a balance, of capital gain and the dividend income. And your purposes will also guide you that how you need to operate your fund in a defensive way or in offensive way, you will see. So based on the risk assessment of the funds can be categorized or can be observed in this way. And if you see the spectrum of risk based on the risk return profile, you will see the hedge funds, like the conventional way, hedge funds will give you most exposure to the risk and also will take you or will bring more return for you. And the second spectrum based on, I mean, from the most riskier to the less riskier. Okay. Number 2 is private placement. And then equity investment is here in the middle, and the Sukuk securities. So from here, you already have learned that Sukuk is safer than the equity investment. I mean, here we are interested in Islamic equity investment, not in traditional equity investment. Okay. But in terms of risk return in conventional mechanism, in conventional market also, their profile, risk return profile are similar. Okay. And which is very safe, I mean, mostly safe, that is the Mudaraba investment deposits. I do not like to participate in Sukuk. I do not like to make investment in equity. I do not understand private placement. I would like to forget about the hedge funds. Okay. In that case, you have only option to keep your money idle in the Mudaraba investment deposits, and it will be the responsibility of Mudarib, the Islamic bank, to bring your deposits in investment market and try to make business out of it. Okay. Now, what I was saying, that we will try to get more interest from the screening criteria. So there are several screening criteria. So what is the purpose of making a screening criteria? One thing we like to be very cautious, that you probably can recall that what should I say, there is a hadith which is saying that the earth or the world is a prison for the person who is Sharia compliant, and the world is heaven for the person who is not Sharia compliant. So if you want to be a Sharia compliant person, or if you're a fund manager, you want to be Sharia compliant, in that case, you will have a number of restrictions, okay? Because you want to be a Sharia compliant manager, or you want to be a Sharia compliant person, whatever it is. Okay, I'm just trying to relate it. It is not part of our lesson. Okay, but if you like to claim that you do not like Sharia, you do not want to be a Sharia compliant person, you do not like to be a manager to follow the Sharia, you believe that Sharia has no place in managing fund, or Sharia has no place in finance. Okay, in that case, there is no restriction, there is no you will see that the world looks like a heaven for you, because you are fully independent, you are bound to none, you can do anything. Okay, so obviously legally, if you do some illegal things, in that case you will be accountable to the legal authority. Okay, but so I believe that you have got what I just have shared with you. Okay, let's so what is the purpose of screening criteria? So you are a fund manager. Can you recall that company 1, company 2, company 3, you want to make investment in some companies, some through purchasing their shares or purchasing their securities? Can you recall? I mentioned some company name.
Yes, sir.
Okay, so you already have learned that there should be some criteria based on which the Islamic funds can either make investment in these securities or they cannot make investment in these securities. Okay, so let's proceed. So there are some criteria based on which you have to select. So some screening criteria are purely financial screen. That means this screening criteria will be based on some financial numbers or based on some financial statement figures. And there are some sector screen. It will be based on the sector in which the company in which you want to make investment is included, the sector. Okay, you know the difference between the industry and sector. You know the difference between industry and sector. Let's think of telecommunication sector. How many industries are here in telecommunication sector? There are several industries, several interrelated industries. Can you give me some examples of the industries which are part of this telecommunication sector? Say handset manufacturing companies, say network providing companies, then the companies which are selling the bandwidth, or the companies which are providing the base station. I mean the industry. Okay, these industries are contributing to the telecommunication sector and they are interrelated. And the companies which make business in the similar line, same line, they are in the same industry. Okay, so if I ask you that GP and the Huawei are both in wireless telecommunication industry, or they are in telecommunication sector? What do you think?
Sir, telecommunication sector.
Okay, so you have got it. Okay, so we'll talk about it in sector screen. Okay, what are the financial screen? In financial screen, total debt outstanding, simplistically it indicates the total liabilities. Total debt liabilities indicates the total liabilities. Okay, for the company in which the Sharia fund wants to make investment, that company cannot have total liabilities which exceed 1/3 of total capital, which exceeds 1/3 of total capital. Okay, so let's think of here by total capital we are indicating the total shareholders equity. Total shareholders equity in terms of the financial statement. Say in terms of financial statement, let's think of the total capital is 3 billion. Okay, and the total liabilities is say 2 billion. In that case, what is the likely value of the total asset of this company? 5 billion?
Yes, sir.
Okay. Now, say that company total liabilities is 2 billion and total capital is 3 billion. Now, what is the ratio here? 2/3?
Yes, sir. 2/3.
2/3 of its liability, 2/3 of its their liabilities is 2/3 of their capital, right? So can this company be included in the Sharia funds portfolio?
No, sir.
Okay. Now, your company cannot be a company which make investment in cash and interest bearing securities which exceed 1/3. It actually includes that out of the total investment, apart from the fixed asset, out of the total investment, the cash and the interest bearing securities cannot be more than 1/3 of the investment. Now, what's wrong with cash? You already have learned that what's wrong with interest bearing securities, but what's wrong with cash? Out of your 3 taka investment, you can have maximum 1 taka of cash and interest bearing securities. You cannot have more than 1 taka, I mean 1/3 of cash and interest bearing securities of your investment. What do you think? What's wrong with cash? Any guess? No guess.
Sir,
Yes.
sir, not understood. What is the investment in cash?
Investment in cash. Okay. So if you would get what's wrong with cash, you would get the answer what's investment in cash. Okay. So keeping cash is also part of investment. Okay. Okay. Let me give you the idea that so that you will get the issue. When there is a cash in the finance text, when there is a cash in the finance text, or there is a cash in financial statement, you see that there is a cash in financial statement. Don't try to understand that this cash looks like cash, currency, and coin. Or some petty cash, or some cash in the accounts executive's drawer. This cash has not been indicated in the financial statements, or this cash has not been indicated in finance text or in any notes. Okay. Actually, this cash is in the bank account. This cash is in the bank account. It can be either in a current account, or it can be either in saving or in savings account. And you know very well, in modern times, interest is available in current account and savings account, right? Is it? Interest income is available in both current account and savings account.
Yes, sir.
Okay. So what do you think? Have you got the purpose that how investment in cash becomes Sharia incompliant? Because when you have more cash, more cash, you are likely to keep those cash either in your savings account, or in your current account, or in your some interest bearing account. You are very likely, or you are likely to withdraw all the cash and keep in your drawer? What do you expect? What is the very likely behavior? What is the very likely behavior? Say you have 50,000 taka cash right now. What will you do? You will move with 50,000 cash with you, or you will keep 40,000 in your bank account and move with 10,000?
Sir, move with the amount I need.
Move with the amount you need. Okay, but you will keep a good amount of money in the bank account? It is not a very controversial question. I mean, I'm arguing something and I'm giving you some idea that what is the rational behavior or what is the expected behavior of people. So it is not a kind of controversial. So that is the reason that that's why those companies have been discouraged from investment by the Sharia fund based on the financial skin. Okay, next, receivables and cash cannot exceed 50% of assets. So you have already got the answer why cash. What's the wrong with cash? Okay. Now the question is, are you familiar with the accounts receivables? Are you familiar with the accounts
Yes, sir.
receivables?
Yes, sir.
Okay. So what's wrong with receivables? You are a manufacturer, you have sold a number of goods, I mean a specific amount of goods, and you are a discount seller and you have sold in credit term, you have a huge amount of accounts receivable. And what's wrong with accounts receivable in Sharia? Anything wrong to sell goods on credit, or there is
Sir,
other
it will
things?
boost, sir. It will boost credit sale, and it is not good for companies.
Company means, okay, it can be good for companies, it cannot be good for companies, but that is not the actual way of attacking this screening criteria. But I would like to remind you from the Finance 101 course, you probably can recall that have you seen such kind of credit terms in credit sale?
Yes, sir.
What does it mean? Try to recall. I'll help you.
Sir, timeline maybe 90 days by
Yeah, if you
something
pay
like
the
that.
dues by 30 days, I will
30
pay you
days.
5% discount,
Yes, sir.
or you have to make the dues clear by 90 days, right?
Yes, sir.
And what would happen if your account receivable exceeds 90 days? What will happen? What will happen?
I have to pay extra interest.
You will be charged interest. Okay.
Yes, sir.
Usually this is on daily basis. Okay. So have we got the reason what's wrong with Sharia? Sharia does not have problem that you like to sell goods on credit. Sharia has problem with
Riba.
Okay. Now, you probably can recall that there are some penalties we have to make when we make overdue of utility payment. When there is overdue of utility payment, you have to pay, say, 5%. If you pay by 15 days or within 180 days. This also look like interest. Okay, so the utility provider actually gets how much? This say 1,000 taka bill, but he is charging more from you because you are paying on an overdue basis, and he is actually charging interest in the name of penalty. And okay, let's look at some sector skin, and these are more qualitative terms. And remember, we have excluded Bragg Bank because Bragg Bank is a conventional bank, but Bragg Bank has been a very growth security for last couple of years, and a number of people has made a good amount of profit by making investment in Bragg Bank. But if you are Islamic fund manager, what you cannot do? You cannot make investment in conventional bank. Okay. Now, you cannot make investment in those sectors which are engaged in pork production and distribution. And you cannot make investment in breweries and distilleries, the companies which produce these goods. Okay. You also cannot make investment. I mean, who are you? You are a fund manager. You cannot make investment to the companies which sponsor or which finance the gambling and casino operations. Okay. And you cannot also make investment in the companies which make business of pornographic media. And now one interesting issue. Say say American Airlines. Say this is one company, and another company, say for example, Trump Hotel. I'm just taking some arbitrary companies. Okay. Can you make investment in these companies? Or you make investment in another company which also, I would say, a super shop, Ireland based super shop, okay, UK based super shop, say Tesco. Or you might think of Walmart. Can you make investment in these companies? You are Islamic fund managers.
Maybe no, sir.
What's wrong with American Airlines? You have said maybe no, but you have not said absolutely no. But I tried to just think of what's your perception, but what would you say? Why you do not like to invest in American Airlines, or why you are thinking that Sharia is not giving you the permission to make investment in American Airlines? Very quick, please.
Sir, maybe they are not following the Sharia.
They sell or supply alcohol?
Yes, sir. This can be a reason.
Okay. Then Trump Hotel. This hotel has brewery and distilleries.
Yes, sir.
Okay. This super shop, Tesco, Walmart, has completely separate shelf for breweries and for alcoholic drugs.
Yes, sir.
Okay. Now, the answer to your question is no, you cannot. You can still make investment if you see what is their primary business. What is their primary business? American Airlines to sell alcohol.
No, sir.
So selling or supplying alcohol is their secondary business, and it might contribute 2% or 1% of their revenue, right?
Yes, sir.
Not 98%. Similarly, for Trump Hotel, say alcoholic things, or I'm just thinking of that part, that they contribute 5% of their total revenue. Or in case of Tesco and Walmart, selling alcoholic drugs might contribute 10% of their total revenue. In that case, what are you seeing? What are you observing? In that case, Sharia is allowing you to make investment in these companies when you see their primary business is Sharia compliant. Am I clear to you?
Yes, sir.
Okay. But if you see you want to make investment in Star Media, which has a number of TV channels.
Sir. No, sir.
Okay.
Yes, sir.
Okay. So component selection by Dow Jones Islamic Indices. Why we want to see this? The thing is that other than this screening criteria, what we have seen, these are the widely accepted screening criteria. And there are some screening criteria which has been followed by Dow Jones Islamic Indices. You probably have learned about the Dow Jones, right? You probably have Dow Jones, and Dow Jones have also developed a number of indices, and they are in the involvement of developing indices in several countries. Do we know we have a Sharia index in our country for Dhaka Stock Exchange?
No, sir.
Anyone, any idea?
Sir, I know, but I do not know how it works.
Okay, so Dow Jones has Dow Jones use this list and mentioned that these companies will be excluded in the for making investment by Islamic funds or Sharia funds. Okay, you will see that these are mostly similar to the criteria what we just have seen. Okay, and they also have identified some sector and classification code, and they identified which sectors cannot be in which sectors you cannot make investment. Okay, and Dow Jones has also mentioned some financial screen, and you will see that mostly these criteria are similar to the financial screens what we just have learned. I would strongly recommend you to go through this financial screen and try to learn what has been specified by them in the financial screen. And these are kind of how their indices and their classifications are reviewed and in which time, and how these are implemented. And here I would like to say that I mentioned about the Sharia Board, and sometimes it is costly for the Islamic Fund to maintain a separate Sharia Board. In that case, they might take help, or they might take assistance of the global Sharia board. There is a global Sharia board, and there might be a presence of country level Sharia board. In that case, instead of maintaining a separate Sharia board in the fund specifically, they might take guidance and report to the country Sharia board or the global Sharia board. Okay, because there is a cost involved with the screening what we just have mentioned. In that case, it is convenient, it is cost saving way that instead of maintaining separate screen criteria, you can look at that what Dow Jones has permitted, or what your own country or the countries in which you are making investment, or the markets in which making investment, do they have any Sharia compliant indices, and what are the criteria, or what are the screening criteria mentioned in those index development criteria. I will try to show you just after finishing this lectures from slide. Okay, now what I was saying, that what you can do when there is a mixture of haram income. I gave you the brief idea. You have to make the calculation separately, and you need to distribute the haram income as a donation to named charity. And as a fund manager, you have to make a list of recipient, and if when there is a, after making this distribution, which distribution, this haram income distributed to the charity, and now the remaining amount is Sharia compliant, that amount is will be given to the unit holders or the investors. Okay, and hedge fund has a number of debates that whether it is Sharia compliant or not compliant, and hedge funds make a number of strategies to make investment, and which includes making speculation and making short selling, and taking position and derivatives. By using these mechanisms, they make money, and it requires a huge it requires a good amount of money. I would say much more greater than the funds required by general equity fund or general bond fund. But the problem is that when you are doing a hedge fund, you might participate in some activities which are involved with gharar, and there is an issue you might involve in gambling. That's why there is a number of Sharia concern. So a number of countries are now proceeding and giving the hedge funds approval to operate by following some conditions, by strictly following some conditions, and by specifying some rules what the Islamic hedge fund can do and cannot do. And from the ethical perspective, ethical investment industry, the funds are ranked based on how ethical the fund operation is and how transparent the fund is. And ethics is highly encouraged in the fund management, and when there is a presence of ethics in the fund management, you'd see the governance of the fund and the way of dealing with the managers and way of dealing with the staffs get improved over time. Okay, so there is a statistics of some fund performance of some Islamic funds performance. Okay, so now let me show you two things. One is, do we have Islamic indices, and from which we can follow some screening criteria instead of looking at, you see how I'm proceeding. I looked at dscbd.org and I looked at the About Us tab, and I moved to DSC indices, and I am going to click the DSCX Sharia index methodology. You see?
Yes, sir.
Yes, sir.
Okay. So there is a document which has been popped up for downloading. Let me open this file for you. Here it is. Do you know who developed these indices for us? S&P rating companies, Standard & Poor, and the Dow Jones, both companies. Okay. So it was back in probably 2011 they developed these indices for us. Okay. So I strongly encourage you to go through this document, and I would say particularly this portion, Sharia screening. And you see they are maintaining this Sharia board, and you see that they have mentioned some sector-based screen. Okay, sector-based screen. You will see several sectors we just have explored, and you see some accounting-based screen which we have covered under the financial screen. And you see the leverage compliance, cash compliance, there are some compliance issues. Okay. And it is all about the index issues. How the companies have been included in the DSCX Sharia index or DSCS. Okay, it is the acronym DSCS. Okay. And you can look at the performance of the DSCS from here. It is the default tab, the DSCX, but how you will see the DSCS, you will see the performance of the DSCS in this way. Okay. Now, second thing I would like to show you that how many of the Sharia compliant funds are right now operating in our country. Okay. And from where you will get the list. Okay, it is probably here. You see from where I am moving, issue of securities and the fund. Okay. And here I am selecting the mutual fund. And what I would do, okay, here the funds are listed all together. Probably there is a place where the Sharia funds have been mentioned separately. Okay, so let me filter out that how many funds include the name Sharia. How many? 9. Okay. Probably it is the regulatory requirement. Okay. So now by Sharia, I have got 9, and by mentioning Islamic, I have got 5. Is it? So let me show you some Islamic mutual fund, CAPM IBBL Islamic Mutual Fund. Then AIBL First Islamic Mutual Fund and IFIL Islamic Mutual Fund 1. These are under the category of closed fund. Okay. Now under the open fund, we have 2 Islamic fund. Not 2. In total, we have got 9 plus 5, 14 Islamic funds. Okay. UFS Podda Life Islamic Unit Fund. Another one is ICB AMCL Islamic Unit Fund. Okay. Now, okay, let me show you by the name Sharia. Okay. They identify separately Capitec IBBL Sharia Unit Fund, IDLC Asset Management Sharia Fund, and Shanta Amana Sharia Fund. Can you recall the Amana? From where we learned it? In which concept we learned about the Amana? Which topic? Capitec Podda PF Sharia Unit Fund, UFS IBBL Sharia Unit Fund. And this, I have investment in this fund, Lanka Bangla Al Arafa Sharia Unit Fund. And the fund is not performing well over the years. I probably made investment in this year, December 4, this time, December 4, 2017, when it was opened in during this time. Okay, subscription closing, I mean, during this period. Okay. Then ATC Sharia Unit Fund as okay. So have you got the way that how can I look at the funds? Now the question is, I want to look at that how these funds operate. Okay. We just have learned some I mean from the text that how our Sharia fund should operate. Now you have to look at least prospectus of one Sharia fund to solidify your learning that how actually they operate. Okay, I just have opened the prospectus of the IDLC Asset Management Sharia Unit Fund. Okay, I recently have made investment in this fund, and I'm earnestly requesting you to go through the prospectus of this fund, not for the exam purposes, but for making your learning more vibrant and making your learning more practical. Okay, so you will see the investment objective, and you will see that whether they are growth fund, they are income fund, or they have the balanced objective. And you will see the investment management process. This is the part of our today's lecture. Okay, so you'll see that how they apply this. And we are finishing our lecture by saying the purification. You'll see that how they purify their income. If you allow me, I will look at into this page. Okay, and the risk factors, and these are the some selling issues. Okay, so let me take you to the 36th page to show you that how they purify their income. Sharia investment guideline is not only sets the criteria of Sharia compliance for investment, it also ensures that profit distributed to the investors is also completely pure in terms of Sharia law. Given the complexity, actually it is complex, of the current financial market, Islamic scholars acknowledge that there could be a chance of impure income, probably a very little portion, blended in the total income of a business. Accordingly, they articulated the way to cleanse the final profit to be distributed among the investors. And for purification, IDLC Asset Management Limited will use the purification ratio provided by DSCX Sharia Index. DSCX provided company-wise dividend purification ratio on a monthly basis, along with the investment universe. IDLC Asset Management Limited will use the DP ratio, dividend purification ratio, to purify the dividend received from companies by using the following formula. So purification amount is equal to DP ratio multiplied by the cash dividend. Okay, now the whole investment management process is reviewed, monitored, and vetted by the Sharia Advisory Board. Initial Sharia based screening of listed companies, business activity, and financial ratio based screening. The list of Sharia compliant companies will be provided by DSCS. So you see, the instead of being a very big company, they resort to the DSES for the list of Sharia compliant companies. Okay, they do not make their own screening. They make, but they rely much on it. Internal research for identifying potential Sharia compliant investment opportunities. And final investment decision by the investment committee, and investment decision is executed based on the recommendation of the investment committee, and the income is purified. And you might be curious to know that how this DP ratio has been developed. You will look at this document and you will see the DP ratio way of calculating the DP ratio. Actually, this DP ratio reflects the portion of the income which is impure for that company in which you are making investment, and the portion of the revenue which are coming from the pure source, I mean Sharia compliant sources. Okay, by incorporating those things, this DP ratio has been developed. Okay, so I believe that what we have learned or discussed so far, these are too many to digest for today. So let me stop recording.